What's up, traders? How are you doing? Welcome to this lesson. In this lesson, we're actually going to show you one of our 3 trading strategies that we as tomato traders trade. In the previous lesson, we showed you the principle on how you can learn to trade in just one day. And in this video, we're going to show you how to trade. Now, tomato traders trade 3 strategies. And it's not really the fact that these are the 3 strategies that make us tomato traders, but that we are focused and we know exactly why and when we're going to enter the market. And that's what we're going to talk about today and show you how to do. For some of you, you might be super excited right now because the trading strategy that we're going to show you has been around for decades. As far back as you can take charts, it has been around. It's commonly known. You might even know it already. But here's the point. You might not have been instructed how to trade it properly and walked away from it. So today's lesson is to show you that strategy and begin to give you some confidence, and that's it. Remember, this course is going to stretch over several lessons. So you're going to get it piece by piece over the coming weeks. And it's super important that you watch every video to the end because there's beneficial information throughout. All right, we got the housekeeping out of the way. Let's get on with it, right? That's what you're waiting for. So what's the trading strategy? Are you ready? MACD divergence. What? I know MACD divergence. It's a worthless trading system. Really? Stick around. And if you stick around, you might find out something that'll help your trading more than you can ever believe. So for those of you who have seen it before, hang on. For those of you who haven't, let's take a second and describe what it is. Now, the MACD indicator, and we will go more into this indicator and describing what it is in future videos. Just understand that it tracks trend. That's it. So it should follow price. If price is going up, the MACD should be going up. That's simple. Divergence means that things are going in opposite directions. One's going left and one's going right when they should be going together. So here's the simple principle for a buy trade. Now we're looking at the favorite, Apple, right? Everybody loves Apple. And it's had its hard times. This is a daily chart. This is a 4-hour chart. We look at higher time frame charts so that everybody, no matter your lifestyle, can take advantage of these trading opportunities. You can use these on lower time frames. We'll discuss that more in the future. Remember the principle? What should the MACD and price be doing? They should be going together, same direction. Well, you notice that from here, price moved lower, but what did the MACD do? It went higher. Price went lower, MACD went higher. Opposite directions, they should be going together. Divergence, that means the strength of this trend is getting ready to leave. And could be what? Price could be getting ready to reverse direction. Now this is a key element. For those of you who know MACD divergence, you may not have known this point. Most people look at MACD divergence as a reversal. The majority of the time it's a retracement. And that'll help you keep how to take profits better in mind, again, in future lessons. So when we see this divergence, when the trend is going down, price is going down, and then the trend and the indicator is saying, hey, that strength is getting less, there's a good chance we're going to get a reversal like we did here. So that's a buy trade setup. When you see price going lower and the MACD going higher, that's called bullish divergence. And we're expecting for the trend to weaken and retrace, or in this case, reverse. Now let's look at, and that's on a 4-hour chart. Now let's look at Apple over here on a daily chart. Price was continuing to go lower through here, right? And the MACD was what? Going higher. And then we had this big reversal. That's all we're looking for buy trades. Are the MACD and price going the opposite direction? There you go. That's a buy trade. What about for sell trades? Well, it's just the opposite. Let's take a look at the 4-hour first. Price was going higher. The MACD was lower. In other words, this hump was lower than this hump when price was higher here than here. And what did we talk about on that? That, oh my goodness, it's a retracement the majority of time. And you can see you can still make money, but you may not always make the big money that you see here. We have to be fair-handed about this, right? But let's look at another example on the daily chart. Price went higher. The MACD went lower, and another big move happened through here. So that's it. For sell trades, you're just looking for price to be going higher when the MACD is going lower. And then we're going to look to enter the market. How to enter the market will be in our next video. Right now, you're like, oh, that's Apple. Okay, fine. Everybody loves it. But come on, really? You just cherry picked it. So here's the opportunity we're going to open to you. We're going to look at a few more things and a few more markets. Why? To prove it to you? Yeah, sort of, but we've proved it already, right? So any further evidence should really instill confidence in you. And we encourage you in the comments, ask us to bring up some charts. Name it. IBM, natural gas. We can chart it. We'll put it up here and we'll look at it on the same time frames, not just in real time like we are now, but we'll look back in history too and see if it was effective. Why? Because for those of you who just kind of like threw it all out the window, MACD divergence, you're going to find out that it's been around for decades. It's been successful, but sadly, you weren't trained how to trade it properly. And so you may have left it behind. Maybe you want to put it back in the toolbox after these lessons. All right, so we're using TradingView and we're going to put some TradingView lessons in a playlist for you. You can use any charting software. So we looked at the dearly loved Apple. Let's clear our chart here. Now, let's look at the beleaguered General Electric. Everybody hates GE. It's dog. I've lost money. What's wrong with it? Companies go through their ups and downs. Do you remember Apple? We just looked at. I remember buying it when it was like about $4 a share. Wish I had it still. $4 a share. Look at it now. Largest company in the world. Who'd have guessed? Companies go through their cycles. Regardless, who cares? We're looking for what we know, right? So let's do that. So price went higher here. Oh, but the MACD did too. So that's not our trade. They're going in the same direction. Price went higher from here and the MACD was lower. That's our trade setup. A little bit of profit. A lot of times people are going, it's not very much profit. You take a look at the fact that this broke through here above $10 and it went below $9. That's about a 10% move in just a short period of time. Okay, that's huge. You have to get that in your mind. These percentages, they're massive. Now let's look over at the daily chart. Price was moving down. Now remember, the MACD, as we'll get into more details, is the blue line. It was moving higher. And look at that. $6 to over $11. That's massive. On the beleaguered dog, General Electric, everybody hates them. They're screwed up. There was a ton of percentage, a ton of capital to be made trading divergence. All right, that's General Electric, right? Let's look at another market. Let's clear this up. Now we're going to choose just the plain old S&P 500. Do you see anything here? Well, price moved higher from here to here. The MACD was lower from here to here. And there was a good move. Now, some people look to go in and grab 2, 3, 5 points trading the S&P minis. Well, if you take a look at this, there was about 30 points of profit in there. Now, here's a question. The MACD's moving higher. What's price doing? Is it moving lower? No, it's moving higher, right? It's not our divergence. That's not bullish divergence. Now let's hop on over to the daily chart. MACD's moving lower. Price is moving higher. There's our trade. Bam. It's a beauty too, right? Here's another example. MACD's moving higher. Is price moving lower? No, it's moving higher. That's not our trade. Now for sure, as we look over here, the MACD is moving lower and we see price is moving higher. And remember how we said that a lot of times it's a retracement. This would have been a stop out. What? A stop out? I lost money? Really? Let's talk about that for just a second in the beginning of our lessons here. Every trading strategy is going to get stopped out. Every one of them. And the reason that you could still be a losing trader is because you haven't accepted that fact. And because we haven't accepted that fact, we haven't learned how to apply strategy to overcome losses, which will be included in later lessons of this course. So again, subscribe, put your questions in the comments below to make sure that you know when we release those lessons. Here's the question. Would a small stop out like this, how does that compare to a nice big profit like this? These are the kind of things professional traders keep in their mind. All right, so we've looked at a few different markets. Let's look at a few more. Let's look at the euro dollar. Why? Well, because we're not going to provide any real service to you if we show you beautiful market after beautiful market after beautiful market. At the time of this recording, Brexit is just in turmoil. It should have been settled almost a year ago. It continues on. The markets are just up and down all over the place. And sometimes the strategy appears and sometimes it doesn't. This looks like a terrible market. Were there any opportunities for you in here? Well, we look over here. No, not really. But let's look at this. MACD was moving higher, price was moving lower, and there's a little bit of profit in there. In a terrible market, remember this is a 4-hour chart, this isn't a bad trade so far, and this is in real time. And if we look over here, the MACD was waving higher, price was moving lower, and there was a nice little trade. It chopped around. Remember, this is a daily chart. This is like 3 weeks to get just a basic amount of profit, but it was there. What does this mean for you? In heinous, horrible, ugly trading conditions, if you know exactly what you're looking for, like a tomato trader, you're looking for your trading strategy, in this case, MACD divergence, both bullish and bearish, you don't have to be torn up by markets like this. You can actually make money in them. It's crazy, right? It's awesome to look at terrible, messed up, crazy markets and thoughtfully put our trading strategy in there because it can give us even more confidence. So let's take a look at something else. Let's look at gold. Do we see our trading strategy in here? You might be looking at this and going, oh yeah, look at that move. Again, this is the danger of doing analysis, seeing the hindsight and seeing the move. Actually, these are about the same height, so we should pass on them. In real time, we make our trading decisions on the right-hand side of the chart. Now, for sure, the MACD is moving a little higher there, and price, as you can see, moved a little lower here. This would be a real-time trade that we'd be looking to take. Now, let's look at this. We actually call this nested divergence. And in this case, it's bearish because we're expecting the chart to go down. The MACD went lower, price went higher. Remember, we talked about we had to be prepared, understanding that it's majority of the time a retracement trading strategy allows us to book our profits a little bit stricter, keeps that in mind, keeps us with good strategy, and then it turned and went the other way. And then we had another instance of it. Nested, which means overall, in the same side here, we had a couple instances right in a row Nested divergence is awesome because the market it might even break us even or stop it out. But when that breaks, it gives us some nice profit like we see in here. So we've looked at a few markets. Did we cherry pick them? No, we just took them from our list. What we'd like to do with forward going lessons is you see the list here. If you type in the comments something that you would like us to look at, we'll do that. We'll add it to this list. Now, this lesson was a little bit longer, and these lessons in the beginning will be a little bit longer. We appreciate you staying with us all the way through. Going forward, they should get shorter and shorter. Not to 0 seconds, but you understand the point, right? So what does all this mean for you? Well, there's really going to be two camps. Those who knew MACD divergence before and might be scoffers and skeptics. Maybe it'd be good if you stuck around. We encourage you to do that and allow yourself to maybe learn something new, be trained, and see that something that's been around for decades is still here, still is in the market, and still can be traded successfully. For those that are new, don't let it blow your mind. What should blow your mind is, as a tomato trader, we look for specific criteria that give us an edge to trading the market. Doesn't capture every move. It gives us the confidence to know what exactly we should be doing and when and why. So what might you want to do with the rest of your day today? Well, go pull up some charts. Put a MACD indicator on there. Look for divergence. And prove to yourself that it reappears in the market over and over and over again. How to profit from it will be shown to you through the rest of these lessons that we'll continue to post here. As we said, we don't want to be convicted of any cherry picking, so post any questions you have down in the comments. Post something you would like us to look at down in the comments. And in the next video, we're going to break away from the strategy just a minute to explain the MACD and the elements that you see here on the charts. We just needed to get the good part out of the way, right? Why delay it? Hey, thanks for being here with us in this session. We'll see you in our other lessons.